Hey, good morning, everyone. Marty Mazzori here, May 19th, Friday, 2023, with your end-of-week stock market snapshot. A few things to show you today. I'm going to end with global sentiment. And speaking of sentiment, I just wanted to talk on kind of the immediate term dynamics. First of all, of course, the debt ceiling debate is hot and heavy on Wall Street and off Wall Street. A lot of clients are asking for our perspective on that. As I said, I think in the midweek update, of course, the debt ceiling will be increased and politicians will try to extract as much as they can in the debate up to that point. But it's been pretty friendly relative to what I think a lot of people expected in terms of the rhetoric so far. It's not a done deal yet, so we'll see what happens between now and when it is. In terms of the stock market and why it didn't really sell off, I think the S&P, if it holds where it is this morning, is up like 2% this week, which is a big week. And I believe I said this the other day, even those who might otherwise be bearish, I think would have a tough time selling into the prospects that the powers that be will agree on the debt ceiling and maybe we get a nice big pop. I am tempted to say that that would be a sell the news event, and it may very well be. However, I think there's been enough pessimism. I think there's enough short interest among speculators in the S&P futures space that tells us that there's a great deal of shorts that yet need to be covered. So if we weren't sitting in such a short position overall, at least as it relates to S&P futures and select stocks, of course, as well, I would say that, yeah, I think it would be a sell the news event. And it still may very well be, because we're not getting much of a decline, really no decline into it, at least not this week. In the meantime, we'll just run quickly through the daily charts of the S&P and the ETF that tracks the NASDAQ 100. I also want to take a peek at Amazon, Apple, and Nvidia. Here's your price chart of the S&P 500 index on the daily. And this morning I did, extend these lines because we had that nice pop yesterday. So we've broken out with some serious momentum, it looks like right now, above that 50% retracement, which is the first time since the bottom here in October. Now that is unambiguously bullish. No ifs, ands, or buts about it. We've been stuck in this trading range. The momentum indicators have suggested that it'll fail and break out below. Right now, it's broken out above, and that all by itself, I can't say is anything but bullish, and I get where people may want to pile onto that breakout. However, when we look at the two momentum indicators that we respect the most, we have to burn through these bearish divergences before, in our view, this is technically bullish. In fact, this is technically bearish. So we have a new high, right, relative to this breakout here. Still have this area here to overcome, which also coincides with what is going to be resistance, I suspect, if we get there, which is that 62% retracement area. The NASDAQ 100 ETF, QQQ, we are now, for the first time since the bottom, testing the 50-day retracement, which turned out to be serious resistance for quite some time on the S&P 500. You still have your bearish divergence. We're breaking out into overbought territory on the NASDAQ, and you can see when we've been here before, at least for a while, the index gave up the ghost. Almost got here, but we had a bearish divergence against this rising wedge right here. Didn't quite get to overbought territory, but that was enough to bring the market down until we started wedging at the bottom against positive divergences, and that was enough to bring the market, or the NASDAQ 100, into a really solid, now call it 7-month rally, right? Got nearly there here, and then at the all-time high, we got very much into overbought territory. So we are in overbought territory with a rising wedge pattern, which is a bearish pattern, against bearish divergence in the MACD. So again, I'll say it like it is. Difficult or negative technical setup does not mean that this thing can't melt up even further, catch momentum, and burn through these divergences and turn into a positive technical setup. This is just how it looks to us today. Okay, big, heavy-duty players in these averages, one being Amazon. Here we have a channel right here. Short term, you can draw that up trend, and that makes it look like a wedge, you know, against bearish divergences, and now overbought territory, right? Here's when Amazon was last overbought, right? This big thrust, kind of like we've had here recently, and here's where Amazon was overbought before that, against, you know, kind of a similar pattern right here. So yeah, I would say this is a precarious setup for Amazon. Apple, oh gosh, very much so. You know, you have a very, very classic rising wedge right here. You've got your very longer kind of extended divergences here. So yeah, Apple is kind of poised to come, you know, to come rolling over, and we're hitting right against this area that has been resistance all the way back here to December 2021. And again, you know, right in here, we were painting a picture that was very bullish for Apple, kind of mid 2021. But since then, you know, we're hitting this long-term resistance against some long-term bearish divergences and a rising wedge pattern. All these things suggest momentum is dying, and again, could be a catalyst that has us thrust through there. Big strong breakout, catches momentum, pulls money in, right? People who are short have their stops up in here, forces them to cover, and you're off to the races to the upside. Not our base case, but certainly within the realm of possibilities. Now, Nvidia, I think, is a real representative of the big artificial intelligence craze, right, based on their contribution to that space. And so here's Nvidia. I think it's next Thursday that they report their earnings, and just a lot of optimism pouring into there. See the breakout above this rising wedge. Nice buy signal in here. However, we're just got into overbought territory, although overbought for Nvidia doesn't really mean a whole lot, or it hasn't so far this year. I mean, you could have gotten excited right in here, right? And got just a little bit of a pullback, and it was, you know, people jumped in and bought that with both fists, right? So really, really extended here on Nvidia. Don't expect that the earnings will be disappointing next week, but yeah, this one's way out over its skis in our view. I'm not telling anybody to go short it. It'd be a tough one to short under the circumstances. But, you know, I think if we revisit this in, say, the weeks to come, it wouldn't surprise me to see this, the perspective, you know, that years of growth due to AI are discounted in this, and this ultimately looks like a tech bubble type situation. You know, these are all things within the realm of possibilities. But just looking at this chart, if I knew nothing else, I'd say, wow, that one is really, really in a precarious spot right here. Now that I think about it, to the extent that Nvidia is discounting, say, the AI craze, take a look at the price to earnings ratio. 136 times earnings, folks, is expensive, to put it mildly. Based on estimated go forward earnings, 69. Okay, so make no mistake, there's a lot priced into that chart that I just showed you on Nvidia. And of course, when you look at valuations, different industries, different stocks tend to trade at different valuation levels. So one thing we like to do when we're looking at individual stock is look at it currently from that perspective relative to where it trades historically. So the orange triangle tells you from a 2-year historical perspective where Nvidia has traded on average in terms of price to earnings, right? That's where it trades on average. Here's where it sits today. Enterprise value to EBITDA, right? Average today. Enterprise value just to EBIT, average today. Enterprise value to revenue, price today, price to book value, average today. So relative to itself, right, Nvidia is trading at quite the premium. There is a ton discounted in that price. Relative to the competition, right, they just give us PE, enterprise value stats as well. So much more expensive than the competition. And then if you just look at the group dynamics, the obvious suspects in terms of Nvidia's competition, it's pretty much Nvidia and Intel that from a valuation perspective are out over their skis a bit right here. So for what it's worth, folks, we're just kind of looking at the overall environment, looking at stocks relative to conditions, in this case looking at just one heavy hitter and assessing how we should view this particular chart again relative to some of the underlying fundamentals. And I'll let you go after this. Here is the Centix sentiment, right, among global actors. The current conditions in white, the 6-month outlook in green. Here is green rolling over, actually coming back a little bit, and then current conditions rolling over and everybody giving up the ghost here before 2008. This data only goes back to like 2002, which is why I'm not showing you a big sample size here. And then here are current conditions continuing to go up, but here is the forward outlook rolling over. Got to pay attention to that green line because you can see current conditions then ultimately rolled over with it. But notice as the stock markets move along these lines, right? The stock market bottomed when the forward outlook bottomed in here, but of course the recession was coming. And then here we are with the forward outlook rolling over, current conditions rolling over, right? Stock market rolling over, current conditions, catching a bid here, so to speak, right? Or at least stabilizing, right? And the stock market now reacting to that. However, look at the go forward outlook, right? Again, just another reason, folks, to be somewhat cautious in here, be very diversified, and if you know how, maybe hedge the extreme downside risk. So folks, that was a longer one than I anticipated. Thank you for staying with it this long. Next up will be our economic update, which looks like it's going to come much later in the weekend. Thank you as always for watching and listening. I'll be back shortly. Take care. Bye-bye.